Join me as I dive into the world of self-employed insurance and challenge myself to find out if I'm really protecting myself with the right coverage. As a self-employed individual, you're probably no stranger to the thrill of being your own boss, but with great freedom comes great responsibility. One of the most important responsibilities you have is to protect your business and personal assets from unexpected risks and liabilities. That's where self-employed insurance comes in. Having the right insurance coverage can be the difference between success and financial ruin. Many people think that self-employed insurance is just an added expense, something they can't afford or won't need. But the truth is, being underinsured can be a ticking time bomb waiting to destroy everything you've worked for. I've spoken to many self-employed individuals who think they're covered, but in reality, they're leaving themselves open to huge risks. One common misconception is that only big businesses need insurance, but the truth is, anyone can be sued, regardless of the size of their business. Another misconception is that having some insurance is better than none at all. But the reality is, having inadequate insurance coverage is almost as bad as having none. You might think you're saving money by opting for the cheapest policy, but if something goes wrong, you'll be the one footing the bill. And trust me, you don't want to be in that situation. I've also come across people who think that their personal insurance policies, like health or home insurance, will cover their business. But the truth is, these policies are designed to protect you personally, not your business. You need specific business insurance policies to protect your business from unique risks and liabilities. When it comes to self-employed insurance, there are several types of policies to consider. Liability insurance, for example, protects you in case someone sues you for negligence or malpractice. Health insurance is essential for freelancers or solopreneurs who don't have access to group health insurance plans through an employer. And property insurance protects your business equipment, inventory, and even your office space. Liability insurance is especially important if you provide professional services or advice to clients. For example, if you're a financial advisor and one of your clients loses money due to your advice, they can sue you. Having the right liability insurance can protect your business from financial ruin. Health insurance is crucial for self-employed individuals who rely on their income to support themselves and their families. Imagine if you were to suddenly fall ill and couldn't work for several months, how would you pay your bills? Having the right health insurance policy can ensure that you receive the medical care you need without going bankrupt. Let me share a real-life story with you. I know a freelancer who didn't think she needed business insurance because she worked from home and didn't have any employees. But one day, a client tripped and fell in her home office, injuring themselves badly. The client sued her, and despite having some personal insurance, it didn't cover the business-related liability. She was left with a huge legal bill and a damaged reputation. This story illustrates the importance of having the right insurance coverage in place. If the freelancer had invested in liability insurance, she would have been protected from the financial consequences of the accident. It's a harsh reality check, but it's a risk that many self-employed individuals face every day. In another case, I know a small business owner who thought he had adequate insurance coverage, but when a fire destroyed his office, he discovered that his policy didn't cover the full value of his equipment and inventory. He was left with a huge financial burden, which almost put him out of business. These stories highlight the importance of having the right insurance coverage in place. As self-employed individuals, we need to be proactive in protecting our businesses and assets. To recap, selecting the right insurance coverage is crucial for self-employed individuals. It's not just about having some insurance, it's about having the right insurance that protects you from unique risks and liabilities. Thanks for watching, and I'd love to hear about your own experiences with self-employed insurance in the comments below. If you're looking for more business insurance tips, be sure to check out our next video. Join me as I dive into the world of public liability insurance and challenge myself to find out if it's really mandatory for self-employed folks. As a self-employed individual, you might be wondering what kind of insurance you need to protect yourself and your business from unexpected events. And one type of insurance that often comes up is public liability insurance. But what is it, and why is it so important? There's a common misconception that public liability insurance is mandatory for all self-employed professionals. Some people think it's a legal requirement, while others believe it's only necessary for certain types of businesses. But the truth is, it's not always a hard and fast rule. In fact, the requirement for public liability insurance varies greatly depending on the country, state, or even industry you're in. Another misconception is that public liability insurance is only necessary for businesses that deal directly with the public. While it's true that businesses like retailers or restaurants may be more at risk, the reality is that any business can be held liable for accidents or injuries that occur on their premises or as a result of their work. This means that even solo freelancers or remote workers could be at risk if they accidentally cause harm to someone or something. Some people also think that they don't need public liability insurance because they're careful and won't make any mistakes. But the thing is, accidents can happen to anyone, no matter how cautious they are. And if you're held liable for damages or injuries, it could financially ruin your business, even if you're not at fault. Operating without public liability insurance can be a huge risk, especially if you're working with clients or customers who could potentially sue you if something goes wrong. In some regions, you may be legally required to have this type of insurance, and failing to do so could result in fines or even criminal charges. For example, in the UK, certain businesses like construction companies or event organizers are required by law to have public liability insurance. In other regions, like the US, there's no federal law requiring public liability insurance, but states or local governments may have their own rules and regulations. And even if it's not legally required, having public liability insurance can still provide valuable protection for your business in case of an accident or lawsuit. Having public liability insurance can give you peace of mind and protect your business from financial disaster. Even if you're not legally required to have it, it's still an essential type of insurance to consider. In fact, many clients or customers may insist that you have public liability insurance before they work with you. And if you're found liable for damages or injuries, the cost could be catastrophic without this type of insurance. By having public liability insurance, you're showing your clients and customers that you're responsible and committed to protecting them. It can also help you stay competitive and attract more business, as clients are more likely to work with someone who has this type of insurance. And in the worst-case scenario, public liability insurance can help you recover from an accident or lawsuit and get your business back on track. In conclusion, while public liability insurance may not be mandatory for all self-employed individuals, it's still an essential type of insurance to consider. By having it, you can protect your business from financial disaster and give yourself peace of mind. Thanks for watching. If you've had any experiences with public liability insurance, share them with us in the comments below. And if you're interested in learning more about business insurance topics, be sure to check out our next video. Join me as I take on the challenge of figuring out if I can legally move my company money to my personal account without getting into trouble. Let's talk about something really important for business owners: transferring company funds to personal accounts. It's a critical topic because it can have serious legal implications, and yet it's something that many of us might be tempted to do at some point or another. Managing company finances is a delicate art, and it's easy to slip into misconceptions about personal use of business funds. One common mistake is to think that business money is your personal money, especially if you're the sole owner of the company. But the truth is, business funds are separate from personal funds, and using them as if they're one and the same can lead to serious consequences. Another misconception is that as long as you're putting the money back, it's no big deal to use business funds for personal expenses. But the problem is, it's not just about putting the money back, it's about maintaining a clear record of transactions and following the law. I've seen business owners use company funds to pay for personal expenses, thinking it's no big deal, but it can lead to serious legal issues down the line. And the worst part is, it can be really difficult to untangle personal and business finances once they're mixed up. Then there's the issue of taxes. Are you reporting those personal expenses as income? Are you paying taxes on them? If not, you could be in for a world of trouble. So what are the legal regulations surrounding business finances? Well, for starters, there are tax implications to consider. You need to report your business income and expenses accurately, and that means keeping your personal and business finances separate. Another crucial aspect is proper bookkeeping. You need to maintain a clear and accurate record of all transactions, including any withdrawals or transfers from the company account. And of course, there are scenarios where business owners might consider transferring funds, for example, to pay themselves a salary or to take out a loan from the company. Let's talk about salary, dividends, and loans from the company. These are three crucial concepts that every business owner needs to understand. Salary is the money you pay yourself as an employee of your company. Dividends are portions of company profits distributed to shareholders, and loans are, well, loans from the company to you personally. But here's the thing, these three concepts have drastically different implications for your taxes and your business's financial health. If you're not careful, you could end up paying too much in taxes or putting your company in financial jeopardy. One crucial insight that every business owner should know is that taking money from the company without following the proper procedures can be considered taxable income. And that means you'll need to report it on your taxes, which can get messy if you're not careful. On the other hand, if you follow the proper procedures, you can avoid a whole lot of trouble. So what's the takeaway from all this? Simply put, keep your personal and business finances separate, and always follow the law when it comes to transactions and record keeping. To summarize, managing company finances is not just about keeping your business afloat, it's about avoiding legal trouble and maintaining a clear record of transactions. Remember, business funds are not personal funds, and using them as if they're one and the same can lead to serious consequences. Thanks for watching, and I'd love to hear from you in the comments. Have you ever struggled with managing your company finances? What are some tips you've learned along the way? And if you're interested in learning more about financial management tips for entrepreneurs, be sure to check out my next video.